everyone. Welcome. Stochastics today. Very popular indicator. So I would like to welcome everyone. It will be a technical analysis webinar. And can't wait to show Stochastic to you guys. So just a quick question. As usual, I need to make sure whether you can hear me loud and clear. By the way, I have already upload a PDF version of this webinar. You're gonna also receive the recording after the end of the webinar. And what else? So thank you, Steve. Well, I was about to ask about the audio and etc. So yeah, thank you for letting me know that everything is just fine. So excuse me. So I need to go through the disclaimer warning as usual. If you need any assistance, any question that you might want to ask me, feel free to type it in the question box. Otherwise, please send me an email at webinars@hotforex.com. So, by the way, how many of you are using Stochastic in their system, in their daily system? So until I have a question, feedback, I'm gonna go through the disclaimer as usual. So this material is provided as a general marketing communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation for the purpose of buying or selling of any financial instrument. All information is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment of this of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading leveraged products such as forex derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. So admin is out of the way, so we are good to go. This is me. Since 2016 in hot forex. However, I've been in the industry for how many years now? Let me think. 10, nearly 10, nearly. Oh, so it's just to let you know that this could be easily used by beginners. Okay, intermediates as well, advanced as well. It depends what are you depends how you're trading. Okay, but yeah, it can be used in a time frame, but you need to adjust it based on your on the time frame that you're trading and your general style. So we're gonna have a quick introduction to stochastics. Obviously, what it is, how they, what is this indicator, what we are actually seeing, how this is created, the formula behind it. Also, the interpretation of stochastic, the overbought and oversold levels and what they signal. If we spot any divergence using stochastic, what that's supposed to mean and what that what information this could give us. Okay, what else? I'm going to see examples of as well. So I think that the examples should be considered for granted, because without examples, I'm not sure whether there will be a good comprehension of the topic. I'm a strong supporter of examples. Otherwise, you cannot really learn. That's my humble opinion, though. So, okay. Develop, just a quick introduction. From whom was developed and for which reason initially, etc. So it was developed by George Lane, sorry, during 1950s. So he was actually a trader. So he was a trader, and he was trying to find an indicator that works for him. Okay, so a securities trader, an author, an educator, speaker, and a technical analyst as well. So eventually became a technical analyst as well. But yeah, was initially a trader, passionate with the markets. So he tried to find an indicator that will help him initially. So as Mr. George Lane said, it was a statement that he was a strong believer and was supporter of this statement. That's why he created Stochastics. So what he said is that that stochastic, it doesn't really follow price, it doesn't follow volume or anything like that. It follows the speed of the momentum of price. So he was trying to identify an indicator that will help him identify the speed or the momentum of price, because you see, we can see price moving, we can see momentum increasing, decreasing, but we cannot really tell how fast price is changing or of how fast momentum is changing, right? So as a rule, the momentum changes direction before price, right? So that's why he created stochastic indicator. Actually, stochastic oscillator, this is the correct way to say it. Why? Because it oscillates. What I mean is a momentum indicator, right, that presents the price of the asset in comparison with the range of highs and low price at a specific time frame. So what does it show? And you see this is how stochastic looks like, right? So this is not the price of the asset, but it's the comparison of the current price compared to the high and the latest high and the latest low. Okay, where is it close to? Is it close to the high area? Is it close to the low area? So it's a comparison. So this is how it looks like. Okay, obviously you can change the colors, you can change the parameters, and etc. I'm gonna explain right now how, but you need to have in mind that you're gonna see it always with these two lines, or the most of the times. I mean, by default, it is combined by two lines. So two lines, okay, which basically these two lines are two moving average lines, okay. And we're gonna see it split it into three territories. So a territory one is the one above 80. Another area is between 20 to 80, and the third area is below 20. So it's ranged from 0 to 100 and split into three areas, which indicate to us the oversold territory, the overbought territory, and the neutral territory. So now what? So okay, obviously, guys, you don't need to know this formula. This is the formula at the back of Stochastic. What kind of calculations they are automatically done for us in order to get this line and to keep seeing the stochastic updated, etc. You don't have to know this formula. Just put it because someone might wants to check and in order to comprehend better, etc. What you should know is what I already said, that what each area represents, and we're gonna see exactly how each area and how the lines will help us identify further information and further signals and etc. So on what stochastic is good, on what topics is good for predicting or identify a possible trend reversal. It also helps identify whether the asset is overbought or oversold at the given time frame. Also, it can help you exit a trade. It might not be useful to identify an entry, but it can be proven useful to exit a trade. Okay. So during all the webinar, I have examples at the left-hand side, sorry, at the right-hand side. And yeah, so I think you will be just fine. But anyway, if there is anything that you don't understand, just interrupt me and let me know, okay? So here we are. Example number 1, and why I have already started with example, because without examples, it's just a lot of blah, 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 right? So example number 1, I mentioned that it's split into 3 categories, into three areas. I should be more precise, right? The one that is over 80, so you see, is ranged from 0 to 100. The area, however, from 80 and above, so 80 up to 100, is considered to give us, is considered to be the overbought area. So if our stochastic is reaching, or it has already reached, or is moving within this area, okay, then we need to question ourselves whether our asset has reached overbought levels. Why you should do this question to yourselves, guys? Simply because if it has been overbought, then there could be a lack of further boost to the upside, further buying pressure. So that implies to a potential reversal lower, either a correction, but a turn lower, because it has reached overbought condition. So there are, like, the majority are buyers than sellers. So that's the first sign that we might consider exiting a trade if we had been long, for example. Okay, so like over here, okay, you see, it is in the overbought territory. So this is where we should start monitoring whether it will turn lower. Okay, so it's not like straightforward, but I'm gonna explain right now. So you see, it crossed 80, but okay, it doesn't mean that if it just crossed 80 it will just collapse or something, will reverse. An indication on whether it's ready to, or is it's about to reverse, it will be if the lines, the stochastic lines within this overbought territory, within this territory above 80, if they start pointing lower or declining, and at the same time we might see a turn lower, a bearish candle on our charts as well. So what's going on over here? You see, it crosses 80, but it was pointing upwards over here, and our candles were bullish as well. So that wasn't a clue. There wasn't any clue over here that it's about to reverse. So that we had to be patient and wait for any further information. So we have seen it flatten a bit, right? And still the price was still rising and rising, but eventually it started slowing down a bit, and we got some doji candles over here. So that was a good sign that is about to either make a correction or be the beginning of a reversal. So indeed, it slowed down a bit, it corrected a bit, came below 80, but it found some kind of a floor over here before trying its very last attempt to the upside, that eventually started a new downtrend. So you need to check your stochastic, but at the same time check your charts as well, and to see how the price is responding. So that was all about the overbought territory. Oversold territory, very, very similar concept. So oversold territory is the area below 20. So is the area in which we consider the asset being oversold. So it implies that it might rebound. If, however, crosses 20 level again. So the same stands for, remember, the same thing is what we said as well for the overbought condition. If we started seeing our stochastic slowing down and cross below 80, and we have the same signs, the same bearish signs in our price action as well, then that's the very first indication that it might start reverting or something. So the same conditions, the same thing stands for the oversold condition. So if the asset enters this area, the area below 20, and it keeps pointing lower, that means that it's still in a downwards pressure. However, if it's started like flattening and started appreciating, and until it eventually crosses above 20, that will actually signal the possibility of a rebound. Okay, so like this example over here, we were in a very sharp, aggressive decline, right? Over here. So Stochastic, indeed, and actually ahead of the time, they had a decline sharply as well, pointing to this increasingly bearish pressure until it crossed 20 over here, right? So see, until it crosses 20 over here. Okay, it's not a straight line, but what I'm trying to say is that the time that it crosses 20 was up here, right? But that doesn't mean that because it crossed below 20, the trend has run out of steam. No, there is further area to be covered below 20, okay? An indication that there is no further bearish pressure will come if stochastic start turning higher towards 20 or even break 20, but at the same time we see some kind of rebound to the price action as well. So they need to agree. The signals need to agree on the price. The signals that we're getting from the price action, from the candles, they should really agree with the oscillator as well. So yeah, you see over here, it was the moment that it crossed below 20. So it was still pointing aggressively to the downside, indicating that there is further steam to the downside. And this is indeed what happened. It continues drifting lower and lower and lower. It reached a bottom over here, nearly to zero, and it was flattened. It was flattening for around 10 sessions, indicating that there are still a lot of sellers halting this drift, extending this drift. Eventually, we had our very, very first sign over here. Can you see that? In which 3 consecutive candles had like the same floor. This moment, we could see our stochastic like slowly trying to slope higher. So confirmation came as soon as the stochastic crossed above 20, and we had already on the price action, we had already 1, 2, 3, 4, 5, 6 bullish consecutive candles. Okay, so that was the very first sign that this decline, this downtrend has ended, and a rebound has started to actually a rebound um, uh, began. Okay, so let's move on. So over here I have a more actually another example in with how can I say that just another example in order to make you feel confident about this, about the oscillator. So here is Kiwi Cat, a 4-hour chart with stochastic being on the default setting. Okay, so sorry about that. So what we have over here in the example number 1 that I'm presenting, I'm like highlighting this decline of stochastic over here. Okay, the reason why I have actually highlighted this. Let me change the color of my pointer because it's mixing everything. Okay, so the reason why I have highlighted this area over here is because you should have in mind that other than where the stochastic lines are pointing on, whether they are placed on the above 80 or below 20, or whether they are pointing and downwards or upwards, what also matters and what gives us further information from the signals is also whether how the two lines are crossing. So we have a red and a white line. Sometimes you might find a red and a green line. The color doesn't really matter. What matters is that the one is a faster moving average line than the other. Okay, so in this example, the fast the fast line is the one is the red one. Okay, and the reason why I have this these two examples over here is in order to see how the two lines cross and what kind of message is giving us. So what we have over here, we have the stochastic lines, both of them being on the overbought territory, right? Until eventually the yellow line crossed below the red line, right? And they started and they were both pointing lower, but the red line, as you can see, it crossed below the um, red line. So yellow line is the fast moving average line. Red line is the slower moving average line. So that indicates that since the fast moving average line crossed below the slow moving average line, so yellow below red, that this is indicating that this is a bearish cross, similar to how we are using the actual moving averages in the intraday. We're saying that if for example 50-day moving average cross below 200, right, this is a bearish sign for the medium term. So it's the same mentality. We're saying that the stochastic line, the fast stochastic line cross below the long stochastic line, that's a bearish signal in the near term. And this is what happened over here. So let's have a look. They have bearishly crossed until they both turn below 80. Okay, and let's see what happened in that period, and indeed this is what happened. It breached to its like peak and started reversing lower. So that was a sign of reversal. Okay. Now a sign of reversal. Yes. So that was the very first sign that it might we might see a small pullback. It might not be the beginning of a new trend, but since we are in a 4-hour chart, that indicated that there was some kind of a correction in the very short time frame. Now, in the point number 2, I have the opposite scenario in which we have our stochastic lines in the oversold territory, right? But they have found some kind of a floor. So that was the very first sign that we might see a rebound. Then the second sign that confirmed that rebound scenario, it was the crossing of our yellow line above our red line. So the fast moving average above the slow moving average. So that was another bullish signal. The third bullish signal is once both lines crossed above 20 and they kept moving above 20. So that was the confirmation that our asset will extend higher, which is indeed what happened, as you can see from our price chart over here. Okay, good question. Which one, how do you know which one is the fast and which one is the slow one? So here is my MT4. Anyway, if you check the settings of Stochastic, right? You're gonna see these variables, right? The volume and so okay. Here we are. But if you notice, the one is moving ahead of the other. So if I zoom in, you're gonna see that, can you see that? That in this case, green is moving faster than the red. Okay, so obviously the green one is the 5 moving average, sorry, is a 3 moving average, and the red one is the 5 moving average. So green is the 3 and red is the 5. So I'm not sure whether there is any further indicator over here, but yes, in this case, the K line, which is the slow line, is the red, and the green line, which is the fast line, is the green. Okay, it's not. I thought that was clearer in the settings of the indicator, but you can understand it because you can see that it's moving ahead of the time. So, for example, over here, okay, which one crossed the below 80 first? Which one? Can anyone tell me? Which one crossed, in this case over here, which one crossed the below 80 line first? Come on, Timothy, I'm sure you know the answer. In this case that I have highlighted, which one of the two lines crossed below 80 level first? Hello, exactly. You all know the answer exactly. So you understand on spot that since it crossed it first, is my fast moving average. So it crossed it first, so that was like, you are thinking, oh, we might have a slowdown, we might have a pullback. It crossed below 80, right? And eventually the red line also followed, okay? Indicating that a slowdown, a pullback, or a correction to the downside is possible. Indeed, the asset, okay, this is a monthly chart, so I shouldn't by mistake I show you a monthly chart. Yes, but yeah, the one that moves first is the fast one. So I'm going to show some live examples later on. Let's stick to the ones that I have in my slide first. So actually, let's see. Okay. Nicholas is asking a very actually that's a very good question. So which is the best setting for stochastic to make it more responsive since it's a bit ragging? So that actually depends on your time frame, okay? But some very like some settings that I noticed that a lot of people are using is either the default ones, right, which is 1433, and it tends to work like properly in an hour chart or 4-hour chart or even daily chart, or 533 or 733 for intraday time frames such as 1 hour, 30 minutes as well. But again, that depends on the asset you are trading and depends on the time frame you are trading. So the best way to identify what is more appropriate for you is just actually test. Start with the default one, which is 433, and then either decline or slightly increased in order to identify whether it satisfies your asset. So as you can see here, I have let's do 30 minutes chart. I have a 30 minutes chart in cable, okay, and I have 533. Why I have 533? Because it indeed gives me some nice signs. So for example, this bullish crossover here, and the fact that it's pointing to the upside implied to bullish momentum. So indeed, I have seen a jump up to 130.56. The flattening afterwards, there was a flattening of my stochastic lines, indicating that there is some kind of a consolidation, or that the asset is running out of steam to the upside and it might revert, until eventually both of my lines, first of all, they have bearishly crossed until they both cross below 8, and that was indication of a pullback. So indeed, a pullback was posted. So it depends. You need to play a bit to see what's best for your asset. So yeah, you need to test before actually apply it and use it as part of your trading system. So for example, you see over here, it might have not reached to the oversold territory. It was just at the barrier, okay? But we could see that it is tested 20 territory and started rising again, and we have this bullish cross over here, right? So that bullish cross, along with this bullish cross that confirmed the very next session. So it was confirmed here, right? Because we had like the cross was like that, along with the fact that we had 3 consecutive sessions to the upside, was a very fine sign that the asset started extending to the upside again. Is this clear, Nicholas? And everyone? In this case, if I change my settings into, okay, let's see, 733, let's see, it will give me a bit of delay signs, will give me better signs. Okay. Up, up, up. Let me just check a bit. Up. It breached, is steady. Cross down, it then cross 50. 80, it stays close to 80, so consolidation. Dipped a bit. No, so the 5 for this asset, it looks like the 5 was just fine for some very short time frame analysis. So it depends. So in the daily chart, for example, the 533 settings is too fast, and it might give us some fast and not accurate signals. So in the daily chart, for example, the default, which is 1433, it might be more reliable than the 533, etc. So you need to go back and check a bit whether it gives you some nice, you see over here. So that was that bearish cross, and the fact that they were pointing to the downside indicated or hinted this decline. So if I had 733, I think it would be even better. Let me check. Let's see. So rising slowly rising, find the peak, turn lower, bearish cross, both below 80, pointing to the downside, and that that seems that it works just fine for the dollar CAD in a daily chart. So you need to play with. There are a lot of settings. Okay, the default one is 1433. So but there are lots. I've even seen people using 7.10.3 and etc. on their system, but yeah, or 25.5, which is which is an indicator that can be is an indication that can be used like for some kind of a medium to long term trading. But yeah, you need to, that depends on the asset and the time frame that you are trading. So you need, unfortunately, there is nothing that I can suggest you to do. I cannot tell you that, guys, the default one works for everything. I cannot do that. You need to play a bit with it until you identify the one that satisfies your system, your way of trading. Okay, so now let's move on to the second part of our webinar, and the second part is about stochastic along with divergence. So what does it mean when we've seen stochastic pointing to a different direction than the price action? So just a quick intro over here on what is divergence. Okay, divergence is literally the indication of possible trend reversals ahead of the time. Okay, so it's not an entry, it's just a sign. Okay, it's a certain sign that sometimes it might become true, sometimes not. Okay, but once you spot something like that, it's good to make to make a note of something in order to monitor it, because if it eventually um, um, if divergence is about to confirm, then this is a very powerful sign for you, because it means that you have spotted a reversal ahead of time. So what it is what I already mentioned, is when divergence can be spotted once indicator movement does not goes along with the price action of the particular instrument over a period of time. It's not our entry. I would like to highlight that. It's just a very early sign. So it literally alerts us that we should put a note, we should monitor this asset for a possible entry in the opposite direction of the trend. So so the very first thing that we need to do is identify the direction of the market, right? Whether it's moving lower, whether it's moving higher, then to check our indicator, whether what the indicator is suggesting. And if the two results are opposite, then this might be an indication of divergence. Okay, so I'm going to show you an example. Here is, okay, I couldn't find the best possible example, but is an example. So the very first thing that you have to do is, as I mentioned, to check the price, whether we are in an uptrend or whether we are in a downtrend. Okay, so over here we have an uptrend. Why? We connected the highs, we connected the lows. I could have put also a line to the lows as well, but it was clear that it was moving to the upside. It was in an upwards channel, right? Is it clear that it was in an upwards channel, even though I haven't connected the lows? Is it clear? I think it's clear, right? So we can see that our pound Swiss daily chart is moving into an upwards channel. So now we have zoomed, we have like tried for this period to check how the oscillator is moving. What does it point? Where is it pointing? Is it indeed goes in line with this upwards channel? So is moving upwards, or if it's moving downwards. So for that period, I connect the peaks of the stochastic lines, and I noticed that by connecting the peaks, it was pointing down. So my trend lines, my price action was moving up, but for the same period, my stochastic was pointing down. This is a divergence. So what that's supposed to mean? It means that, you know what, Andrea, put a note, because this is a divergence, and you might see in the near future the beginning of a new trend, and what that trend will be to the downside. So it might be, we might see a reversal soonish. But again, I said this is not an entry sign. It's just an early indication. It might happen, it might not. What you have to do is to put a note and start monitoring until this sign is confirmed. So how it can be confirmed? Using your trend lines. So I have connected the highs, I've connected the lows, right? Okay, I've connected the peaks of the stochastic. What I'm doing right now, waiting for a breakout of my channel along with slowdown of stochastic. And indeed, over here, can you see that? I had a very strong bearish candle breaking my channel. Okay, so that was a very, very first indication that it might turn down. And that time, right, that time, I could see that my stochastic was also declining, doing some corrections, but it was below 80 and it kept pointing downwards. So I wasn't really sure, because I had some kind of a appreciation over here, a bit of a rebound. So I was waiting a bit. I had a small rebound that with the asset turning back within the channel, until I could see it extending, getting out of the exit in the channel and extending further downwards. Okay, so, and the same stands for my stochastic. So that was the this is when the confirmation came that the downtrend already started. So that could have been a possible entry. Another possible entry, it could have been on the breakout of the channel over here. Okay. Okay, so let's move on. Let's see a bullish divergence. We have seen a bearish divergence. Okay, let's see a bullish divergence. So in this example, so again, the same steps. You need to monitor, you need to observe the price action, connect the lows, connect the highs, just or doing whatever it takes in order to identify whether your asset is trending lower or whether your asset is trending higher. So over here I have connect my lows. Okay, and I have connected also the bottom, the lows for the stochastic, and I've observed that I have a bullish divergence. So bullish divergence means that this decline, this downtrend, that it has been something that I was watching for nearly a month. This decline might runs out of steam, and we might see a potential rebound. So what you're doing, again, the same steps. You put your trailing zone and you start monitoring. Okay, so connecting the lows, connecting the bottoms of stochastic, and waiting a bit. So so over here we don't have a channel, because if I try to connect the highs, it won't give me a channel. But what we have is our moving averages, or you could put a stochastic from this level up to this level in order to see any breakout of the 50% Fibonacci level, or you can just start monitoring whether the stochastic will cross above 20 and breach and break the 50 level, which is the middle of this area, or whether your price action breaks above and extends above 200 moving averages. And all this could be your possible entry levels, as long as before you take your entry level, you have confirmed that in both in price action and in the oscillator, I have seen both of them bullishly configured. Okay, so let me check something. Okay, I don't have any other example of the bullish divergence. But let me check whether there is anything live that we could use. Divergence is not something easy to be spotted, okay? No, it's not definitely something easy to be spotted, so I'm not sure whether I can find a good example right now. Okay, we have something over here. So connecting the lows, and yeah, what we have, guys, over here? Do we have a bullish or a bearish divergence? What is this in this 4-hour dollar cat? What is this? If I zoom out a bit, I could see that it was a sign for a long time now. It wasn't something new, but I didn't spot it on time. Anyone? Is this a bullish or is it a bearish divergence? What is this? I'm gonna remove some indicators just to make it clear for you. Okay. Anyone? Bullish divergence, exactly, Jamil. So our asset was moving in a downtrend, and our oscillator, by connecting the lows, it was moving to the upside. So what we are doing in this case, you can use, we have regression channel over here, we have linear regression channel, etc. So you can. Okay. Let me change a bit the divergence because it's huge. Okay, so we have the channel, and we need to put it in a ray, right? So I have extended it. Why I've done that? Because I have spotted it over here, right? I have spotted it. Let me change the colors so it will be clearer, will be clear for you. So, okay. So we have spotted it over here, right? Here. So I have put my channel on, and I'm waiting to see whether the price will eventually break above my channel. So initially it broken above the channel over here. So okay, it broke it. So what we have over here, I have stochastic jumping sharply higher above 80, but I needed further confirmation. So I had to wait for the next candle to see whether it will extend further to the upside or whether it will get back to the channel. And indeed, it get back to the channel. So I ignore that because it's not sufficient for an entry, right? Then it was consolidating along on the upper line of my channel until this. Can you see that? Until this candle was like a big body one. This one, big body one. Okay. Which actually was also the third in a row, the third consecutive candle outside and above my channel. So I'm ready to see, is this in some kind of an entry? Is it not? Let's see. Stochastic are pointing to the upside. So that could have been a possible entry. Don't be scared. Why? Because it's like it's turning back down again. It doesn't really matter because it could have it is a correction. I mean, by setting appropriately your risk and reward level, you will not be kicked out before it eventually goes onto your favor. But it's always good to wait for the next candle just to confirm your decision. So if you decided not to take the entry over here because the next candle was negative, then another breakout of the channel came over here, which with 1, 2, nearly 3 candles followed. So that was a good indication of an entry since the upwards trend already started. Okay, so what you can do, you can wait for the next candle, at least the very next one or the next 2 candles to uh, be formed in order to see whether you have you can see the asset further appreciating or whether it was some kind of a temporary jump. Okay, is this clear? Okay, I know that's not the best example, but and don't forget that you can use your other indicators in order to identify a better entry. But the divergence sign came by using your oscillator over here. So you have spotted this bullish divergence and you just waiting patiently until you identify that whether this bullish divergence will actually take place and patient and try to identify a nice entry level. Over here, I'm using 733, but also I'm using sometimes 533 for a 30-minute chart, etc. But as I said, you need to test it on your system because it doesn't mean that 533 or 733 or 1433 works for everything and for every single asset and for every time frame. So you need to test it to see whether it gives you nice signals. Okay, so a small recap. If you have any further questions, put it in the question box until I'm done with this small recap. So as we said, stochastic oscillator helps you identify possible trend reversals, not entry levels, but it could help you identify exit levels. Also, you can spot overbought and oversold conditions as well. It is combined by 2 lines, right? So a fast moving average and a slower moving average. So the crossing of these 2 lines could give you a bullish on a bearish sign. Also, by changing the oscillator settings, you need to test it, maybe in your demo account or something, to ensure that this is improving your trading and not the opposite. Okay. Also, if you spot divergence using your stochastic oscillator, that's a very powerful tool. If it's noticed on time, so put a note down and start monitoring your asset until you eventually have a confirmation that the divergence took place. Divergence sometimes might not take place, okay? So that's why you need to patiently wait for further confirmation that a new trend has already started and that the divergence that you have spotted in the past indeed started um, to be developed. So what else? Yeah, that actually we bridge to the end of our webinars, guys. If you have any further question, please let me know now. Are we able to get a copy of the webinars recording? Yes, you're gonna receive it in your email, in your inbox. Sorry. So so as I was saying, guys, yes, you're gonna get a recording. Sometimes it might go to the junk or the spam folder, so have a look on your junk folder as well. But yeah, after every webinar, we send an email with the recording. Okay. So the crossing of the indicators. Okay. If the fast line, the fast moving average, the fast stochastic moving average, which in this case, let's go back. If the so okay, let me put the live one. So if the fast line cross below the slow line, then this is a bearish sign. If the fast line cross above the slow line, then this is a bullish indication. Okay. And how you can separate, Jeremiah, how you can identify which one is the fast and which is the slow one? Simply check your chart and identify which one moves faster. So in this case, it's the same example that I have done before. Like here, which one of these two cross first above 80? It was the green one. So the green one in this case is our fast and the red one is our slow. So when the fast, so the green crossed below the red, that was a bearish sign. When the green crossed above the red, that was a bullish sign. Okay. So guys, that was the end. If there's no further question, I'm going to call it a day. You're going to receive in your inbox the recording. And anyway, for any further questions that you might want to ask me or Stuart, just don't hesitate to send an email at webinars@hotforex.com. Okay? Yes, it is. Daniel, it is sensitive to volatility like any indicator, especially if you are using a very um, short time frame. Okay, that's why we need stop loss and risk and reward ratio always, just to avoid any kind of a sudden volatility in the market due to news or due to, I don't know, politics, etc. Thank you so much, guys. For anything you need, just send us an email, maybe with a screenshot of your setup or something. We'll try to help you identify if you have done anything that doesn't really work. Okay. Thank you. Have a great day ahead, and see you again in this week's Facebook and YouTube lives, and also tomorrow's webinar as well. We have another webinar tomorrow, how to improve your trading mindset with Stuart. So a very um, um, like it's very important to manage, as we keep saying, your emotions in trading and be disciplined. because otherwise anything that you're trying to do from a technical perspective, it will just go, it will just not work. It's you need to also manage to discipline your mind, your emotions, in order to avoid get greedy in trading when you're trading. Okay, so it's an opportunity. Tomorrow's webinar is an opportunity for you to improve your skills by learning how to turn your losses into lessons. Okay, so join the trading mindset webinar tomorrow. So have a great day ahead, and I'll see you again tomorrow and Thursday. Sorry. So see you. Bye bye.